With that, I'm going to turn over the session to the illustrious Nin, so take it away. Thank you very much.
Good afternoon, everyone. I am Nin Desai. I head a crowd-funded technology venture capital fund based out of Chicago. We invest in Series A and Series B around disruptive technology companies and write checks anywhere from $1 to $5 million. We have a very interesting panel here with us.
John, and I grew up in the States. I've been 34 years living in Israel, the CEO of our crowd. We're one of the largest equity crowdfunding platforms in the world. This year we'll invest about $120 million in equity.
The CEO of Crowdfunder.com, a serial internet entrepreneur turned investor. So this venture is doing both in one. We focus exclusively on equity crowdfunding, oftentimes bringing influencers and celebrities to deals.
Jerry Needell, head of sales and marketing at Indiegogo. Indiegogo is the world's largest crowdfunding platform. We focus specifically on rewards-based crowdfunding.
My very first question, what are your thoughts on crowdfunding versus raising money from friends and family, which is the traditional route, especially when it comes to a startup? Let's start with Jerry this time.
Yeah, so they often go hand in hand, but at a high level, it's able to better assess demand by taking your idea to the public.
There's a big difference between raising money from your friends and family and from raising money, certainly on a site like our crowd, because if you look at who our investors are, they're CEOs of major corporations, including some of the world's largest banks and Fortune 500 companies. They're venture capitalists. They're people who have huge value to add. And we're focused not just on the funding part of this process, but on the mentoring, the management, the supervision, and then essentially the crowd building to get.
Chance, what are some of the non-monetary benefits of crowdfunding?
I think a really, really significant one comes in the form of being able to attract investors who might not know you already.
We have a single entity which we manage as a GP. We take traditional sort of venture economics on the light side, and then we help to deliver that value. We act as an intermediary and as a curator of the value. So, for example, we believe in a rather old-fashioned but I think important principle, which is sit on company boards. We're investing big chunks of money, but even if you're investing the $500,000 or $1 million, to invest that money and say, good luck, vaya con Dios, I'll see you at exit, I think is irresponsible. I think that you have to sit on the board, you have to engage in good governance, you've got to help mobilize the crowd.
John, you mentioned that you sit on the board and you now are sitting across from a VC. Do you consider them competition or do you consider them complementary to your business?
They're totally complementary.
Chance, your thoughts?
So we do something pretty different, although we also do SPVs. We also manage the investment for entrepreneurs so that they don't have a bunch of messy people they don't know. They have us as an investor. What's different is we don't take board seats. We want to see a strong company with strong governance already in place, and we don't see that as a scalable model for us, nor do we want to be in the business of trying to figure out who good board members are for companies.
The minimum amount ranges from $1,000 to $10,000 based on crowdfunder or our crowd. How does the investor demographic differ? You said that you have a lot of executives.
Look, we haven't got total net worth like average numbers, but our people are serious people of means and background. We like the term our crowd. It's a little exclusive.
And how does your investor demographic look like?
Ours is really all over the place, although I would say location-wise, while it's a bit more diverse than what you see published by the Angel Capital Association or where most VCs live, it still centers around the 5 main pockets of startup ecosystems in the U.S. That's really New York, LA, San Francisco, Miami, and then some little blips in between, and some in Chicago. What's interesting, I think, is that it ranges everywhere from people who've been in private equities markets that never really touched early stage startup finance, who then became interested in it and wanted to get into that world, all the way up to serial entrepreneurs who don't have a company right now and just can't help but keep getting back in the game to experience the juice and invest in great entrepreneurs. And then we have a whole host of people that are just the doctors and dentists.
One last question. How does Jobs Act transcend once you get into the international market? John, you guys have a big presence in Israel.
You have to play by the U.S. rules, period. More than a majority of our money is coming from the U.S. It comes from all over the world. We have a big chunk from Australia. We have a very fast-growing cohort in China and elsewhere. But the U.S. really sets the pace. All looking to the U.S. for leadership. You know.
Thank you, gentlemen. Absolute pleasure. Thank you, everyone, for your interest.
All right, so now for the